As investors, it's important to reflect on our experiences and try to learn from them. This year has been a difficult year to navigate the markets, but it's important to keep in mind that investing is for the long term. In this video, we'll be sharing several important lessons and considerations that we can apply in our investment strategies going forward. First, let's talk about market valuations. It's crucial to scrutinize whether a company's high valuation is justified and to consider whether there is something on the horizon that can support it. This can help us avoid overpaying for a stock. For example, it's important to ask ourselves if there is too much enthusiasm and not enough that can still take the stock higher, and to scrutinize whether the company has something planned in the next year that backs up the premium. Next, let's discuss the importance of company transparency. If a company refuses to talk to or treat its shareholders fairly, it can be a red flag and maybe a reason to avoid owning the stock. It's important to look for companies that are transparent and responsive to their shareholders. It's also important to be skeptical of salesmen. This includes company executives, hedge fund managers, and TV correspondents. It's important to be cautious when listening to them and to remember that they may be trying to sell their perspective or promote their interests. It's important to do our own research and not blindly follow the advice of any one person or group. Another important factor to consider is the Federal Reserve's influence on the stock market. The Federal Reserve, or Central Bank of the United States, has tools at its disposal to influence the economy and financial markets, such as setting interest rates and conducting asset purchases. These actions can affect the supply and demand of credit in the economy and impact stock prices. It's important to be aware of the Fed's actions and how they may affect our investments. Now, let's talk about some things that can be helpful to consider when investing. First, we should invest in profitable companies that provide needed products and services with consistent earnings. This can help us avoid investing in unprofitable companies with uncertain futures. We should also avoid overpriced stocks, particularly when the Federal Reserve becomes more hawkish. Instead of focusing on fads and trends, we should look for companies with solid foundations and long-term potential. In bear markets, it's important to preserve capital by prioritizing protecting our investment rather than trying to chase returns. Bear markets can also lead to great discounts, but we should be cautious of value and yield traps by looking for consistent earnings over a 10-year period, significant cash flow, and a strong balance sheet. In conclusion, we hope these lessons and considerations are helpful as we navigate the markets and make investment decisions going forward. Remember to do our own research, be aware of market valuations and the actions of the Federal Reserve, and focus on profitable companies with solid foundations. With these strategies in mind, we can be well equipped to make informed and successful investment decisions. Thanks for watching. If you enjoyed this video, please hit the like button and consider subscribing to our channel. If you have any suggestions or comments, please feel free to leave a comment below. Thank you for watching, and we look forward to bringing you more informative content in the future.